Okay, good afternoon, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there, just to let me know that it is working. I hope everybody's having a fantastic afternoon so far. Hopefully your trading's been going well. If you've started trading for the week, hopefully your weekend was awesome. Looking forward to getting into this webinar with you guys today. I had a couple of requests over the weekend from people just asking like, hey, would you talk about this particular subject? So there's been a couple of subjects that have been requested. And so I want to kind of talk about those things. And if you have specific questions throughout the webinar, that you did not request, feel free to request them as we go along. Just ask questions and say, hey, in the chat box, tell me what your questions are, and I'd be more than happy to kind of assist you and talk about whatever you want to talk about. This class was designed to help new traders, and so if you're kind of a little bit more nervous about asking questions in the live webinar where I'm trading live, I get it. So hopefully this webinar you don't feel as resistant toward asking those questions. So I hope you do ask several questions, and I hope what I'm teaching helps you guys. But as we get started, I just want to welcome everybody here. Also want to welcome any new faces with us, and I want to give a shout out to everybody in the recording. Just want to say hello to you and welcome you here today. I'm excited to have you. But without further ado, let's go ahead and jump into this. As always, I need to remind you about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is, and ultimately how that would affect your account if you lose money. Okay, awesome. So the main, I guess the main thing that was asked, I guess I had two requests over the weekend. Somebody wanted me to help them with their technical analysis and kind of go over, what support resistance, what is a trend line, like what's a good trend line and things like that. And then I had another person ask me to talk about how to actually take a trade in MT4. I did explain that a little bit this morning, but I'd like to do it again, just so that everybody's on the same page and that you can figure out how to use MT4, because MT4 is confusing. It's a very confusing platform, but that's what standard is out there in terms of like getting funded with a prop firm. Pretty much everybody uses MT4. Most brokers use it, but once you get it, it's actually really, really simple. I do have another video you guys can watch in my basic training library that goes over how to set up your charts in MT4. I can direct you to that recording, but if you want, we can do another class just like this where we go over that live. But it's up to you to send me those requests. Just shoot me an email, send me a text, just say, hey, I want to talk about this subject, and we can talk about it. All right. So the first thing I actually want to do before we talk about the technical analysis is I do want to make sure everybody knows how to use a lot size calculator, at least is introduced to it. And I want to make sure everybody knows how to take a trade in MT4, because that's where that's where you're going to be trading mostly. I do all of my analysis in TradingView. I don't trade in TradingView. And you'll find that that's consistent with most professionals out there. They don't trade in TradingView, but TradingView is where you do all of your analysis, and the trades are actually executed in MT4. But I never use the MT4 tools for analysis because it's so incredibly terrible, right? So TradingView is elite, absolutely, 100%. It's the best platform out there. I don't know what you do without it, honestly. I don't know what we did before we had it. It's crazy. Anyway, so what I want to do first, couple of things. Actually, before I go into taking a trade in MT4, let's pull up the lot size calculator. So I have a couple of places where you can do this. Even TradingView has a lot size calculator. In fact, real quick, if you just pull up any currency pair you want or any chart, whatever stock, it doesn't matter. Let's just pull up the Aussie CAD because we sent out a signal this morning on the Aussie CAD. You can actually just search for indicators up here in TradingView. You can just click on indicators and search for whatever you want. And so, in fact, sometimes I actually just go in here, and like last night, I was just taking a look at, I was just going into indicators and just searching like keywords of things I'm interested in, right? because you guys know I trade liquidity. I look for liquidity zones. And so I wanted to see like, hey, has anybody made a killer liquidity indicator? And sure enough, there's a ton of liquidity indicators here. So I kind of scroll through these sometimes and just see, is there anything useful? Some of it's junk, maybe most of it actually, but occasionally you run into something really powerful. And so that's just, just play around with it. But anyway, an indicator you can use, you can search lot size calculator. I think simple lot size calculator. I think this might be the one, or position size Sonar Labs got one. And then I think you just click where you're going to enter. So like right here, and then you click your stop loss, boom, right there. Okay. Set the target one price for the position calculator. So that's target. Okay, perfect. Yeah, that's sweet. Oh my gosh, that's so cool. Oh, that's so cool. So it's like 4x, you put in your entry. Okay, these are your entries. Okay, apply. That is so sweet. Let's see, can you adjust this? Yeah, I want to risk 1%. We'll say with an account, we'll say the account has $100,000 in it. Okay, click OK. Yeah, there you go. So this is kind of nice. This right here, down here at the bottom, if you guys can see it, I'm trying to make it viewable. Yeah, so it says $100,000 balance. You can change it in the settings. So you just come up here and click settings. You can change it. That is super nice. That's maybe the easiest way to do it. Balance, you put whatever balance is for your account. You type in how much risk you're willing to risk per trade. We'll say $1,000 or 1%. So this is the lot size you would need. It's going to give you a 1 to 4, 1 to 5 RR. We talked about this morning, but I'm just going over it, right? And it's amazing. It's so cool what people come up with. It's amazing. And anyway, whether you use this one or any of the other plethora of different lot size calculators, you must use one. I'm going to just say it right now. You have to use one. You won't make this a business until you use one. You will be a gambler until you figure out how to use a lot size calculator. Okay. This won't ensure that you won't lose money. In fact, you will lose money with it. The point is that you're losing what you expect to lose. You're not losing anything more or less than your expectation, right? The worst thing to have happen, and I've done this before, everyone has to try it, I think, at some point. The worst thing that happens is you take a trade, that trade goes bad overnight or whatever, and you're surprised when you wake up by how much money you lost, right? It should never ever be a surprise that you lost over the amount that you planned. Sometimes it's surprising when I lose a trade because I thought the trade was really, really good. That happens, right? But you should never lose a trade that's like, oh, I lost $20,000. I thought I was only going to lose 1,000. No, you can't do that. You can't have that type of thing. So anyway, this is really cool. I like this one. In fact, I may end up just using that one going forward because of how awesome that is. The other one that you can use, there's a lot of places I've bookmarked a lot of these. Let me pull up my bookmarks. There's this one right here. I found this one last week, and actually this is a great one to use, by the way, because tonight and tomorrow I'm going to be sending out signals on US 30, NAS 100, and maybe gold. It just depends. This is a great one to use for US 30 and NAS 100. So you just have to search for it in here, and it's just a website somebody made. And you can search, so that here's US 30. So I'm going to be sending out signals on that. You punch in the currency you're trading in. You put in the price. So this is different. You're not doing it in pips. You have to punch in the price. This would be the entry. So when I send out a signal alert, where's my Telegram here? So if I send out a signal alert to you guys, like I did this morning, the entry price is whatever's here. So if you see that on US 30, when I send out signals, that's what that's going to be, is your open price is your entry. Stop loss, that should be pretty self-explanatory, right? Stop loss goes right here, and that's going to be price. And then it's just up to you to put in your account balance, like how big your account size is. And then this is also up to you. I'm not allowed to tell you how much to risk per trade. I can give you recommendations based off of what I would do, but it's ultimately up to you to decide what you're going to do. Okay. Um, in general, I'd say nothing over 1% you should never take a trade over 1% risk, in my opinion. At least long term. Maybe you find an opportunity you want to risk 1.5 on, maybe. But honestly, in my experience, it's really helpful to just keep it the same every single time. So Claudio, I sent out this signal this morning right here this is the premium chat. I have two chats. This one's people who are not subscribed to the program. And honestly, if you're in this chat, there's 172 members. You could probably leave it if you wanted to, or mute it at least. Maybe keep it if you wanted, but mute it, because I'm doing a lot of advertisements in here and you guys don't need that. But this, I don't do any advertisements in here. I'm just sharing my trade alerts. So if you're not getting the alert, usually it's because there's a join button down here. And if you're not joined in, like you can click into this, but you're not joined. You have to join in. There's going to be a join button. And if it says muted, then you're not going to get signals. Okay. So make sure it says unmuted. And then you may need to go into your settings, like right here where it says mute notifications. May need to go in there and unmute. Make sure it's, man, I would also set it up on your phone, download Telegram on your phone, so you get alerted when this comes up. Let me know if you still have trouble, though, Claudio. Also, Kylan says, can you show this calculator in the chat? For sure. Yeah, so here's this one. I found this one last week. This is great for maybe like the US 30 signals, because the other one I really, really like is, oh, real quick, before you do this, you click calculate, and you can also click calculate lot size in MT4, MT5, click that and click calculate. It'll give you the actual lot size. So it'll just tell you this is your lot size to risk this. Okay. Another place I like is MyFX book lot size calculator. I've been using this one the longest, I think. And some of the things I hate about these websites, though, is the ads. So maybe I might even just start using like MT4 instead, or not MT4. I'll use TradingView instead. Sonar Lab looked legit. That I'd never used that one before, and I just used it in front of you guys. Honestly, I was impressed. So probably I might even use that one from now on. But you can use this one. This is the one I've used the longest. It's best for Forex pairs because you don't have a lot. You got gold in here, silver, but I don't think you have US 30 or NAS 100. I don't think oil's in here. So just keep that in mind. You plug in your account balance. So we'll say 100,000, put in 1% risk, stop losses. I don't know, we'll say we take a trade with a 30 pip stop loss, and you click calculate, and this is the lot size you need to risk this much money. And it's done by pips, not price. So if you like that better, maybe this one's a nicer one to use. But no matter what, you have to use one of these. There's no way around it. You have to. You have to, you have to, you have to. Okay, because you can take really great trades and not be profitable. In fact, I've had weeks, I had a week a couple weeks ago where I won 45% of the trades I took during the week. And so I didn't even win half the trades, but it was an extremely profitable week for me and for the program. And it's just because we're using a lot size calculator, and when we win, we're having such bigger wins than our losers, even though I had more losers than winners. That's honestly a little side note on that, and then I'll move on quickly. That is one of the reasons why I think a lot of people quit trading, or they don't like my style of trading, is because it has a little bit of a lower win rate than what I think people are used to. Okay. But the thing is, when we hit wins, these wins are just so big that it's just like, okay, we're back in business on the very next winner. And not just back in business, like you covered any losses, expenses you had, and then all the profits are extra on top of that. you know, and then if you hit another trade, that's a winner, because winners come in streaks and losers come in streaks, right? So you have another winner in a row, and all of that's just profit too. Like you had one that covered all your losses and some profit. The next one just gives you even more profit, right? So that's the style I subscribe to, but inevitably I do have more losers. It just happens. It's important to understand that type of trading style. All right, guys. So that's lot size calculator. Once you use a lot size calculator, then you got to go place a trade in MT4, which most of you trade on, not everybody, right? But you got to place a new order. So I have, let me pull it up here. So this is the new order button on. So you basically go to MT4, you click on new order at the very top, and it brings up this window. And this is where you basically design your trade, okay, and your risk management. Very important that you do this correctly. So, you know, obviously we're not trading the Euro CAD, so make sure that that's the right one that we're trading. So we're trading the Aussie CAD. Here, let me just pull it up on my chart over here first. It's easier if you just pull up your chart to it and then start to set it up. Okay, Aussie CAD, and then you do new order. And then you just put in what lot size you want. So let me actually do this one more time with you guys. So I'm actually going to use that Sonar Lab. I love that. That was really cool. Sonar Lab. And then what was it? Let me just do lot size calculator. Okay, so perfect. Let me pull. Okay, so did I get that pulled up? No, this is not what I wanted. Try this again. Lot size calculator. Here it is. Okay, so I'm going to use this again. So it's asking for your open price, which is going to be right here at this entry. And then it says click on your stop loss. So I just click on stop loss where my stop loss is. And then it says click your target. Here's my target. And then, yeah, deposit currencies Forex. That's fine. And then click apply. And then you'll want to double click into it and change your contract, put your risk management in. Make sure your account balance is what it's supposed to be, 100,000, and then you click OK. And so this is telling me that I need approximately 12.77 contracts to take this trade. Okay. So now what I do is I click new order in MT4, and then I plug in 12.77 lots because that's what's indicated down here. And then I plug in my stop loss, which is this number right here, 0.89 555. I just tab over, hit take profit, and I put in 0.90162. That's this number that's up here. And then we know this is a pending order, so we're waiting for the market to come down to our price, and then we'll get in. And so right here, I'm going to put in whatever that price is, which is this gray number right here. So that's 0.89659. And then I double check everything, make sure it looks good, and then I can hit place. And then that puts my order into MT4. So real quickly, I'm going to answer Claudio's question. So let me pull up a demo account real quick on MT4. Okay. Okay, so let me pull this over. So if you're doing, if you've got your watch list, so you make sure you have your watch list up here. It's this button. Once you have it pulled up, you just double click down here. Actually, no, don't double click. Double click just down here at the bottom of the watch list. Hit symbols. Okay. Once you have your symbols pulled up, then what you're going to do is you're going to just see the different options you have. So you have Forex, and you just double click in the ones you want. Okay. Double click the ones you want. It'll be gold, If it's the one you want, it'll be grayed out if you don't want it. And so those are the Forex options. You got crypto. I don't use crypto, so there's those if you wanted them. You got metals. I'm just looking at gold and silver. That's it. Then you got CFDs. I'm just looking at these three, and that's it, right? And then they'll just pop in once you do that. So yeah, that's how you do it. The other thing too, by the way, this was so confusing to me. How do you get a new chart pulled up? Just drag and drop. So if you want to look at US 30, just drag US 30 over here, put it in, and you're good to go. Drag and drop. If you want to see oil, just drag and drop into the chart, and there it goes. Drag and drop. Just drag and drop. That's all you got to do. It took me probably 2 or 3 hours to figure that out one time. So I hope I just saved some of you 2 or 3 hours. I hope that helped because it took me forever to figure that out. Yeah, cool. All right, guys. So that's how you place an order, and that's how you use a lot size calculator. And that's like half the job. Honestly, that's like half the job. I mean, the other half is difficult. You have to know where to buy, you have to know where to sell. You have to find good places to do it. And that is a tough job. It takes time, it takes skill, it takes effort. But you doing this alone, let me just tell you, you managing your risk on every single trade in such a very refined format like that, you're already better than 90% of the traders already. I'm guaranteed you're better than 90% of the traders just doing that alone, because you're not ever going to blow your account ever again. You know how people blow their accounts? Not now, not anymore. We're done with that, right? So now it's on to refining your entry. It's on to refining your exit, your stop loss. That's what it comes to at this point. So pat yourself on the back. If you're going to commit, just do it today. Commit to doing that. Just what I just showed you right there. Your trading already is going to improve significantly, right? Just by doing that, because now I used to be that guy who would just like scale into trades and Forex. Forex doesn't work that way, by the way. You can't scale in, you know. I do other things like I scale in, like I have this like longer term belief in like Bitcoin. So as you guys know, I bought my house with my Bitcoin trade I did a couple years ago. I bought I'm still acquiring Bitcoin on a weekly basis. It just comes out automatically because it's something I'm willing to buy, you know, with a certain amount of money every week for a certain amount of time. And I'm basically doing another trade again on crypto and Bitcoin. It's money, of course, that I'm willing to lose, but it's something that I don't care what price Bitcoin's at. I just want to add every week. It's the same thing with your 401k at work and your IRA, you know, or your pension. They put money into that every month. It's the same thing I'm doing. But those are things that are, you know, you got to do those things too, because those are the types of things that help you build your fortress, your financial fortress for the future. So you got to save, you got to invest in those things. And yeah, we don't really use the stop loss on your 401k, which I guess is a good and a bad thing. I don't know, because you're holding your time horizons, you know, what, 20, 30 years on some of that stuff, 10 years. I don't know. In Forex, because our time horizon is just like a day, 2 days, 3 days, maybe trading, we don't have the ability to scale into a trade. Anybody who scales into a trade probably isn't very successful. I used to do that and I wasn't doing very well. So in trading, the way you become successful is being able to identify and refine an entry and be consistent with that. And then when you're wrong, be humble enough to get out. That's what the stop loss is for, is to be humble, to say, yeah, this didn't work. I'm cutting my trade. I'm out. It's really important to be humble enough to just get out of a bad trade. Otherwise, you will blow up accounts. So, okay. So the last thing I wanted to kind of talk about today, but feel free to continue to ask questions in the chat box there. Last thing I want to talk about is working with trends and identifying support and resistance, because you cannot find liquidity zones unless you know how to find trends, and unless you know how to define support and resistance. Okay. So I'm going to show you something today that honestly, very few people out there will show you. Okay. It changed my life in terms of trading with trends. First of all, I love to trade trends. I'm not going to say I don't. Everyone loves to trade trends. Trend's a good idea. But it's important to realize like when a trend is starting to fade out and when a trend is dying. Okay. Because I love to buy dips. Dip buys are amazing. I love to buy the dip on a trend, but you got to know like if it's actually a dip or if this is like, is the is the trend actually changing the other direction. So I'm going to give you some tips today on how to do that, some very basic stuff. So let me actually find some old trends. Um, and I want to find an example of what I'm trying to talk about here. Um, I don't even, you can pull up anything. Honestly, let's just pull up like, I'm trying to think. Maybe just like the euro dollar. Yeah, let's just pull up the euro dollar and see if we can find a cool trend from the past. I'm going to show you the example I'm trying to illustrate. Yeah, this is probably not too bad. Trying to find a really good one. Really good example of what I'm trying to explain. Okay, first of all, let's define what a trend is. Okay, so here's actually a trend right here. It's on a 15-minute chart. This is back in March on the euro dollar. So a lot of people, what they do is they just go ahead and just start drawing the trend out, but they don't really know what they're actually drawing, right? And I see this inconsistency throughout the industry. So one of my jobs is to set the record straight on actually how to draw a trend line, because there is a science to it. And there are a few different ways to do it, but I really want to make it pretty uniform throughout the industry how this should be done, because there is a way to do this. So when you're doing this, first of all, I would say you have two options. One, you can draw a trend line through the wicks of a candle. So you can see this candlestick here has a wick right here. If you're going to draw it through the wick, make sure you're consistently drawing it through the wick. If you're going to count the wick, make sure you're going right off the wicks like this. So you can, but either way, be consistent. Say, okay, I'm going to only draw it on the wicks. Okay, well then make sure you stay consistent, right? So in order to have a trend, you need to have at least 3 points of engagement. Okay. That one doesn't really give me 3 points of engagement because I have one touch, two touch. This one doesn't quite touch. I guess you could push it a little, but again, that defeats the whole concept of what I'm saying. So you could move this up to the wicks like this. And let's say I'd need to grab this. You could draw it this way. You could draw it like this from that wick to that wick. And then you have a trend here. That works because you have a touch, touch, touch. So as long as you have 3 points of engagement, you have a trend. Now, here's why you need 3 points of engagement. So a lot of people, what they'll do is they'll just start drawing these lines. They'll just say, hey, here's a point right here, and here's a point right here. That's a trend line. I mean, maybe, but it's not, it doesn't have the 3 points. And the reason why you need 3 points is because anybody, literally anybody, including your 3-year-old daughter, can draw a line from point A to point B. And point A to point B is everywhere. It's actually kind of hard to find point A, point B, and point C because you have to have something that's consistent enough to be able to have 3 touches, right? Because I can make up something. I can just be very subjective and I can look at the chart a different way than you would look at it. And I'd say, here's point A and point B. And you're like, well, I have your point A, but I'm also using this point B, but it's someplace else. Right. So that's what creates the subjectivity that we need to get rid of. So if you want to be consistent and be able to draw the same lines that I'm drawing, you need a third point because it's that third point that locks in the line. The line is no longer subject to whatever you want A and B to be because that C is what confirms it. Okay. I hope that concept makes sense. If not, rewind in the recording and just kind of like hear what I'm actually saying because you do need to have 3 points. That 3 points is what makes A and B validate. Otherwise, it's just A and B and it could be anything you want it to be. Okay. So I'm going to show you, let's see if I can find an example of okay, so that's how you draw a trend line. That's how you draw them going forward. So you either got to pick your wicks, or you can draw them through the bodies. So you can actually have the trend line go through the wicks as long as you're being consistent at touching the bodies, okay? Or you can do the wick version. But the most important thing when you're drawing a trend line on your own chart is that you have 3 points of engagement. Absolutely. That's the number one thing. Okay. Okay. Now, how can we use trends in our own practice? Now, here's the thing. How do you diagnose if a trend is strong or weak? So if you have a trend here, which we did or we do, right? So you have this market that um, um, right here, you've got this market that's moving up and up and up and up, right? Every time it pulls back, look what happens. Every time this thing pulls back into here, it pulls back and quickly gets rejected. Pulls back here, doesn't even quite get to the trend line, rejects. Comes here, doesn't even quite get to the trend line, rejects. So you got a very strong trend. If you see this activity, think buy the dip, right? Find and find liquidity zones where you can do this, right? So you're finding breaks of structure and you're finding pullbacks from that break of structure. You can find really great trades doing this, okay? So that's how you diagnose if a trend is strong, is when it pulls back, because every market has pullbacks. Are those pullbacks significant in terms of the recovery? Is it a V-shaped recovery? So I'm going to show you an example of where that doesn't work. This is actually a small example, but you can see the market bounced off the trend line and then it struggled right here and then ultimately broke. When this happens, the party's over. Okay. Now you're looking for sell opportunities, right? It looks like it actually kept going up for a little bit, but that you would be looking for sells. Basically, you'd continue to draw this line out. And actually, it's interesting to see it touched the trend like right there. And then it engaged it right there, and then it had pullback right there. But you'd want to technically look for sell opportunities in places, liquidity zones throughout here, where you could be able to do that once the trend line actually breaks, okay? But let me show you an example of where a trend is really starting to suffer. Actually, I think I see one. I think I see two examples. Yeah, so let's draw this one out right here. So I think I see an example. I think it is. I don't know. I haven't even looked at this yet. Um, you have a little bit of a trend right here. This one just broke. But one thing that could give you a clue on this, so notice how it's bouncing up, bouncing up, bouncing down, bouncing up. It's every time it bounces up, the momentum is slower. So you're getting this move to that high, this high to this high, and you're just not moving as much price action every single time the market makes a new high. That's slowing momentum, right? That could give you a clue as to, you know, what's happening. I'm looking for an example where the market just hovers on the trend line right here. I'm trying to find a really good example of this. So far, the euro dollar has really clean breaks, which is good. Clean breaks are good. I just see a lot of people trade these trends and they get in at the worst time. Usually, and actually that's the thing I was going to say. Typically by the time you can see a trend, you're almost like too late because it's already, you're like, oh, there's a trend. But it's like, yeah, it might be getting close to finishing. Um, just an interesting concept. Okay, let me see if I can find, really trying to find a good example of what I'm talking about. Maybe I'll go to something else. Let's try like gold or something like that. Let's see, this one came down, popped up. Okay, that's a clean break. Clean breaks are great too. Oh, here, is this one? Not really. Trying to find exactly what I want to, I'm looking for a really good example. This gold has been up a lot last little while. Okay, well, I guess I was going to just show you it, but I mean, these are all good examples of good trends. So, you've got a good trend line right here. Let's see, this basically started a trend right here. But it's important to realize stuff like this. Like if you see a market with a clean break of a trend like that, that is like um, some of the best trades you'll take are when you notice this happening. So you're not going to be selling this, right? I guess you're looking for sells, but if you see this happen in real time and you draw this trend line out and you see it actually break and it's a hard break like this, and then it just goes up, your mentality needs to be thinking like, okay, now I'm looking for buys, right? And yeah, sure enough, like after this breakout, you had a nice liquidity zone. I'm just going over an example, right? Nice liquidity zone right here. The market dipped into that and then shot up, right? Um, I'm sure there was several opportunities. Yeah, several opportunities to buy again, like right here. Um, this liquidity zone right here, and the market just broke structure. Basically right here. This was old structure. Market broke it and just dipped into liquidity. Same thing right here. Like this was some structure. Market broke it right here and then dipped in to the liquidity right here. Right. So those are the best trades you'll take. So honestly, I would be the type of trader. I think the best trades you can take. That's kind of what we're doing with the Aussie CAD right now on that signal. Um, the best trades are the ones where you're the first person to the change in the trend. Because it's like this overall consensus in the institutional world that if the trend starts to flip, the money just really starts to flip as well. Like they don't really give the market um, they don't allow the market to like go back and do what it was doing before. If it was going down, they don't really let it do that again. Or they do, but it's just going to come into a demand zone and go right back up, right? Let me try to find some more examples of this concept. I'm trying to find the other one that I was talking about too. Um, yeah, like for example, this actually had a nice little trend line right here. This is actually called a flag pattern right here. I don't do a lot of patterns, but you had a nice trend here, right? Nice little trend, nice trend. And then look what happened. Trend broke. Okay. So when that happens, what's the signal now? Definitely look for shorts, look for liquidity zones for this to come back to. So a good place would be, right here where it actually broke, that's a liquidity zone. And you can actually see the market came back and tapped right into it. Right. And then it was gone from there. Tried one more time and then and was gone. Right. So if you're the first person to see that, these are the best trades. These are absolutely the best trades you'll take. Is to be the first to that opportunity. Now, there's still opportunities to continue to sell throughout this, and there's more break of structures to the downside afterwards. But the best trade, like I said, is right there. Let's see if I can find another one. But go ahead and ask your questions as we go along here. Ask your questions as we do this. Oh, okay. I found this is what I was talking about. This is the example. I think I found what I wanted to see. Yep. Okay, this is it. So this is what I wanted to show you guys because so many retail traders get trapped in this. So basically you have a trend here. Okay. We can agree because it follows the rules. One engagement. I'd call that one an engagement right there. It engages. You don't need it, but it counts. Definitely touches there. Definitely touches here. And touches here. That's a trend line. Guarantee. Yeah, 100% that's a trend line. You can see that the momentum is starting to slow. From each high, it's not moving as high and it's taking longer. It's not like it's pushing up like it did back over here. right? So it is slowing. And then this is where it gets interesting, right? So you all can see this, right? The trend starts to kind of break apart right here. Now, this is interesting. So it doesn't have, it is a break, but it's not like this clear break, like, wow, like the other ones we looked at. Okay. So nonetheless, I want to show you the power behind this. So when a trend breaks like this, what a lot of newbie traders do is they think, hey, I am buying right on a trend line. This is exciting. I'm buying right on the trend. Um, the thing is, if a trend is healthy, we talked about this, it's going to do this. It's going to hit the trend line, bounce up, hit the trend line, bounce up, and you don't have time. You're not going to be scalping, drinking your coffee, seeing this. That doesn't work. It doesn't work that way. You're not going to be able to just sit there and be like, oh, now it's on the trend line. Thank goodness I'm at the charts right when that happened. It never happens, right? The only way you get those is if you put in a limit order. That's the only way you're going to get that trade. You don't just sit there with your slippers on and the market's not going to let you just take that money and just be lucky that you're at the computer at that time. That's why you have to use limit orders, okay? So anyway, so right here's an interesting concept because the trend is breaking down and you can see it kind of broke through, came back up. This is an accumulation area. It's also a liquidity zone because there's a lot of back and forth going on. The buyers are now confused and the sellers who are on top of this are getting on top of it. And that's what's causing this thing to not bounce up like it did. So if you ever see a trend line where it starts to accumulate back and forth and it's kind of static on the trend line, there's a massive opportunity right there, but it's not with the original trend direction. You do not want to trade in the upside when this happens. What you want to do is say, oh, hey, great. I've got a break here. Let's see. This appears to be some liquidity. I've got a liquidity zone right here that could be worth selling at. I've got liquidity up here potentially. There's even a small opportunity like right in here to sell. So those would be like my 3 areas, but it would all be because I did my homework. And yeah, sure enough, like this market, right after it came up to here and sold off. It didn't ever get quite back to this. In fact, it started a new trend at that point, to the upside. I mean, not a trend, but you can see these are some news events, I think, probably through here. But this trade alone, just this little opportunity from here down to here, that's huge. That's a huge opportunity, right? So very rarely do you see a market resume a trend after it's broken its trend. And that's why I'm saying, even if that happens, go ahead and take the loss. Take the loss if it does happen. But your job, my job would be, if you find a break in a trend, is to exploit that, right? So I'm going to try to find one more example just because I want to make sure everybody gets this. Let's try to find an old break in a trend and talk about that. Yeah, actually, here's another example right here. So I see one right here. So here's a nice little trend to the downside. They're everywhere, guys. You can find these all day. Nice trend to the downside right here. You've got engagement there. That's 1 engagement, 2 engagement. That's what I'm saying. By the time you see the trend, it's probably too late. This happens all the time. That's why I guess you would say I'm more of like a counter trend trader, but I'm not counter trend if you think about it, because as soon as this thing breaks, you're a trend trader again. You just didn't realize it. So we're all trend traders. Like, it's funny because like everyone's like, I'm counter trend. You're not counter trend. You're trading the new trend that's just coming up, right? Um, yeah, this trend was to the downside. Maybe I didn't trade any of this to the downside, but now I see an opportunity. This is huge. Like, I'm going to literally show you how this works. So again, by the time you see this set up and it's had the 3 engagements required, it's probably too late anyway. So that's why you got to look for these opportunities. Okay, here we go. So you already know the drill, what we're going to do here. So you got this nice trend line down here. And then something interesting happens. First of all, back here, very healthy. Nice move to the upside and a quick rejection. Nice move to the upside, quick rejection. Third rejection is okay. Nice move to the upside, rejection. But then by the time it tries to make its 4th touch, look what it starts doing. Confusion. It's very static, right? Right through here. this is the beginning of a new trend change, right? And then you actually have a couple of things. You have structure like here, you have structure here, and the market breaks both of those structures, right here, and you break a structure, right here. Right. And it's all stemmed from like this right here, what's going on right through here. So what a lot of traders do is they think, oh, great, I'm selling right on the trend line here. It looks like it's going to head back down. I'm selling on the trend line. But if it starts accumulating on the trend line, it's a terrible sign for trend traders. Terrible. Absolutely terrible. And you want to wait for the market to break structure. And then this is where we pounce. So now the trend is to the upside at this point. So you're looking for liquidity, right? So you got, you could call this some liquidity right here. I would definitely argue that this is liquidity right here. And you've got even several places in here. Like there's definitely several options. And yeah, sure enough, like this market dipped into this one, came up. Let's see, did it follow through? Yeah, we had some nice, wow, we did have some nice moves to the upside. So, and you can use order block indicators to confirm this as well. But basically, you're looking for dip buys now. So dips here, buy, dips here, buy, dips here, buy, dips here, buy. Why? Because this happened, right? Well, this happened right here. So if you're the first person to the change in the trend, I'm telling you, this is the secret no one's been telling you. um, yeah, that's the thing. If you're the first person to see the break of structure, so that's called a change of character as well. In fact, I would argue, if I were to skip to this with the replay button, my guess is this is a change of character on the Lux Algo indicator. I'm almost certain this is a change of character right here, because the whole move was to the downside and now we have a change of character. So that's even stronger than just a break of structure, because that is structure that broke, but it's even more significant because it's the first break of a trend that was previously down and now is moving up. So the chances of these dips working, the first dips in a change of character, the dip buys there are just extremely powerful, right? Anyway, so I hope that helps you guys. I hope this was very informative, eye-opening. I very much hope it was eye-opening. So today, hopefully, you know how to take a trade in MT4, at least have the basics down. If not, we'll keep doing this as long as it takes to make sure you get it, okay? Come back and watch the recording if you need to. This will be on the calendar in about 30 minutes. We talked about how to use a lot size calculator. I gave you 3 different options. By the way, here's the last one. You can put this link in here's the one in the chat box. So you got 2 different lot size calculators you can use. You've got very informative like version of my version, which I think is the correct version of how to draw a trend line and what constitutes a healthy trend and a unhealthy trend, how to find accumulation on trend lines, and then how to find the first break of structure or chotch around a trend line, and then how you can then go and exploit that as an opportunity, right? So every day this happens on different time frames on many different pairs, and our job is just to go out there and get it. So, all right, guys, I appreciate your attendance today. Thank you for coming. Have a fantastic rest of your day, and we'll see you soon.